Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. So today is the Nifty expiry day, and after the mayhem of yesterday wherein everything was looking bad for option selling, today turned out to be a decent day except for some spikes which came in towards the closing. Otherwise I think it was a good day. And The decay, premium decay that happened today was also fairly uniform. We opened the market at about close to I think 200 points in the straddle, and from there it was a more or less a uniform decay that happened, except for the delta move that came in. So there was a huge downward pressure, for which I have been speaking about for the last almost 3-4 days now, that the open interest positions have been very high, and that got manifested itself today, wherein the market cracked big time. And the signs of this were actually visible from Monday itself, when there was a huge position that was getting built in on one day. In between the week there was an attempt to cover this up, and the Nifty rallied also, but immediately within that day also huge shorts were written. So today, at one point in time we were at about 0.5 PCR. Yesterday we closed at about similar range, and the day before also we were. So the whole point is that the kind of positions that are being built up in the market are visible until unless they are wound up. And I had said that people who are making these positions, they will, those are the people who have really big pockets, people who can really swing the market the way they want. And that is where the open interest positions were getting built in, and hugely actually the market swung according to that pretty much. So there was no surprise in that. The only surprise was that little short covering that came in during the week, wherein Nifty tried to go up, but intraday that was like kind of challenged and finished off. So I'll take you through what the action has been today, and what is in store going ahead. So let's start off Nifty chart. As you can see, Nifty opened at about 24,700 odd kind of a range, and then immediately the pressure started building in on the indices, and there was a huge crack, and it just was basically one way. The good thing was that the premium was very high, so all the calls were safe throughout the day, except for this particular move which came in at 230. It was a very big wild move, and all the calls actually spiked. All the near calls spiked, but anyone who has been experienced in the market wouldn't have been anywhere closer to these numbers. People who were trying to be very smart and who keep on coming closer would have got all their stop losses hit. I mean, I'll show you how the movement was. Look at this chart. This is the 24,600 call option. It was trading at about 2-3 rupees, right? 2.3 was the low. 2.15 in fact was the low, and look at the high. It made 60 rupees high. So at 30x within a matter of no time. Even in this spike, within 5 minutes it went to 20x. It ended at about 40, and then it made 60. So the whole point is this, lot of this is expiry day movement, which is, frankly, these kind of movements are not possible to execute until unless you are working with multiple thousands of orders within a fraction of a second. And this is not a retail play that is playing out over here. Clearly there's some big institutions who are just manipulating the option prices. Anyways, so what is it that the retail guys can do is that simply they can hedge themselves, stay away, don't come. Then the premiums are so low, 2.5 rupees. What are you trying to actually gain out of that? So that is something that you need to be very careful about, so that you don't get trapped in these. So this was the Nifty chart. Now this is the Nifty chart for the day. Now as you can see over here, the Nifty movement, as I had said, that this was a resistance for us. 24,800 odd was the resistance for us, and from there we have kind of begun the secular down move. Now it will be interesting to see how this down move plays out, whether we go up to 24,200 or we go up from here. That we'll come to know only tomorrow, once the data is out. But the news from US is not very encouraging, and I'll talk about it in a minute. And this is how the indices are placed from their 52-week highs. So Nifty is at about minus 6.24%, mid cap is minus 7.5%, small cap is about minus 11% from the top. Nifty next is about minus 15%, momentum and alpha are all below 20%. So this is the structure of the market as we speak. Now coming to how the indices performed today. Now this is if you look at it, this is how the indices have been today. So small cap was it's not showing, it's showing flat. Sorry, yeah, just one sec. Yeah, so India VIX actually came down today, which is a surprise. But all the others are in red because Nifty itself was down minus 0.8%. Financial services was 0.4 and so on. Banks were the least hit at about 0.24. But not a great day for the markets. It's all over the place. Now let's come to where the real action is happening, and this is your international markets. Now why international markets the real action is happening is because if you look at how the US bond yields are playing out, they are creating a havoc. Okay, and this is how the US bond yields are stacked up. So US 10-year is now at almost 4.5, it has crossed 4.5, it is actually 4.6, and US 30 years has crossed 5. Now these are huge numbers, and once they cross these kind of yields, then it basically shows that there is panic in the bond markets, and something will have to be done to curtail that panic. Right now as we speak, US futures are slightly up, but this is a big negative. So there have been a lot of negatives that have been coming for the US markets. First the Moody's downgrade came, then the bond yield started spiking up. So it's not been good for the US market, and now it is manifesting itself in equities, wherein yesterday US markets actually fell down a lot. So we will have to see how it goes, but also the story is playing out somewhere in Bitcoin. So if you look at Bitcoin made a new all-time high today. Bitcoin has crossed 110,000 today, and this is the chart for Bitcoin. If you see, it had corrected to about 85,000 also in between, but in the last this is the last 6-month chart. Yeah, it corrected to about 78,000, and from there it has just been one-way move. It has taken the previous high out of again 107,000 it was, if I'm not wrong. Yeah, at 107,000, and now it's at 110,000. So it is making big headlines, and it basically shows that the fiat currency, US dollar, is actually weakening, and there's a lot of trouble in it. So if you look at that is also getting manifested in the US dollar index. It's broken below 100. So US dollar index, whenever it goes below 100, is a good sign for emerging markets, because basically means that the dollar is weakening against a basket of currencies, which is primarily euro and yen. But it basically shows that people will be more interested in exploring other options for investments other than US bond and US equity. So that is where the flows into emerging markets start to happen. So it's good news. People are saying it will go to about 90-92 levels also. So let's see if it goes there. Then it's going to be good for us as Indian markets. But USD INR is still going down, and it's very surprising, because on one hand you have the US dollar weakening, but on the other hand we have INR weakening. So INR is weakening even further in front of the US dollar, which is very sad. But yeah, that's where it is. So especially when the US dollar is weakening against the other currencies, I'm not sure why we are weakening, or maybe it is just that we want to be in a range, and that's why we are now at 86, because we had reached 88 at one point in time. So now we are at 85.94. Gold is another story which is there. So gold is also back. Okay, gold had made an all-time high of 3,500, but it corrected a lot, and now it is back. So if you see the last 6-month chart, it had corrected to about 3,100 odd. Now it is back to 3,300. Made a top of 3,500 dollars per ounce about let's say some days back, couple of fortnight back. So gold is back. So gold is indicating that it's a risk off scenario. Bitcoin is indicating that there is sufficient liquidity, and the US markets are in some sort of a trouble. Now where do we go from here is going to be determined tomorrow with the trade, and how the US markets respond. Now if we have to go down, then 24,200 becomes the next support, as I have mentioned before. If the US markets actually start correcting big time, and it's a big correction that is happening in the US markets, if the yields don't correct, then we can expect a lot of pressure on the equity markets. Then our markets will also fall along with it. But if the yields correct, and if everything comes back to normal, then then we might resume our uptrend also, because we're not very far away from the all-time high. So that's it from me now, and it was a good day for option selling after a very bad day yesterday. So no complaints on that count. And because the markets are down, it's also a good time to make your portfolio. So if anyone is interested in building their mutual fund portfolio, they can fill up the form, Google form, which is there, and I will help people to build their portfolios. So because these are the times when the markets are correcting, that you can actually alter your portfolio to the way, structure your portfolio the way you want to, whether you want to have a large cap tilt, a mid cap tilt, or you want to have a momentum tilt or a quality tilt towards your portfolio. These are the times when the churning can happen. So if anyone is interested, then they can fill up that form, and I shall help you and guide you how to go about the whole thing. So that's it from me now. If you like my video, please do subscribe to the channel, and please do share the video with your friends and family. I shall see you soon. I hope all of you had a good expiry and weren't trapped in that call option mania that happened at 2:30 odd. Because these are the things that you have to really protect yourself against, because your entire day's work, forget about day, entire week's work can actually go in if you get caught in one of these spikes. Because during these spikes, nothing will work. Your stop losses will not work, they will jump. So it's a very bad thing. So just be protected, and know how to play this game. Don't come too close for that penny options here and there. If you have to take these penny options, it's better to stay away. Be at least 500,000 points away, so that you don't get trapped in these kind of spikes. So that's it from me now. I hope you enjoyed seeing this video. I shall see you soon. Take care. Bye bye.